welcome you in this educational video. Today we are doing lesson number 15. Lesson name is Financing of Business. This is video part 2. Let us now understand the meaning of business finance. When we do any business, when we start any business, then we need money. And this money is coming from different sources. So that is business finance. Let's now understand different uses of business finance. It has few points that will make you understand. The first one is purchasing of fixed assets. When we have to start any business, then we need money to buy some fixed assets. The second point is about the business finance is used for our daily day-to-day expenses. The third point explains about the finances used to fund business growth. The fourth use of business finance is to bridge the time gap between the production and the sales. So this gap needs to be bridged. The fifth point explains that sometimes there are different kinds of ups and downs in our work or in daily life. So to meet the contingencies, sixth point explains about different business opportunities which are available. So for that we need business finance to avail those opportunities. So that is why this business finance is used at such point of time for our own benefit. Business finance is important. Let us now understand it through this diagram. There is a need for large-scale operations. And the second point you can see on the screen is use of modern technology. The third point is for promotion of sales, the business finance is important. So money is required at every step. Business finances are of mainly three types. There are different types of business finances. There are three in number. The first one is short-term finance, the second one is medium-term finance, and the third one is long-term finance. The first one, which is short-term finance, is like when you take a loan from any place, then you need to return that in a certain time period. The second one is medium-term finance. This is for a little longer duration, like 2 years or more than that, but not very long time. So the third one is long-term finance. Third one is long-term finance. In this, the time period is 3 years, 6 years, 8 years, for a longer duration. In this time period, one has to return the loan amount or the amount taken. Now let us understand the short-term finance types. There are different types. On the screen you can see the two different types. The first one is trade credit. This is for a time period of few days. You can take a loan or a credit of amount for 30 to 90 days and return in the same time period. The second one is bank credit. Like whenever you take loan, you have to return that on time. And the second one is you can take cash credits also. You have to return that also on time. Third one is bank overdraft. This is also a kind of bank credit. Let's take example, like I am the bank and I want to take some amount of money as a loan, like 40 lakh or 42 lakh, and I need to buy some property, but I need a loan for this and I have a less amount with me. In that case, I would request the bank to keep some amount as minus from my account, and sometime later I will return that amount to the bank. So that is a kind of minus credit would be kept in my account under my name. So that is known as bank overdraft. And below that you can see another word, discounting of bills. Like whenever we do any work and we get paid sometime later, sometime we take money in advance, and by keeping some proof of signature or any other proof. But in case of emergency or need, we can show the bill and then we can get some amount of discount or as a profit for the giver because of some urgency or similar kind of reasons. So that is discounting of bills. Now this one is third type, which you can see on the screen. This is factoring. This is just like you can see on the screen 3 circles, 2 blue color and 1 red color. Like I am in red color, you can see that you and someone else has taken some loan that is in the form of invoice, and I have the invoice as a proof, and the person said that I need 2 months time. Then the bank can help in giving back the money, and during that time that proof can be considered, that invoice can be taken as a proof. This is the fourth type which you can see on the screen. This is the customer's advances. Like if I am a company and I want to buy something or I want to sell something and I need to have some money as advance with me, only then I can give that product or item. So that is known as customer's advances. Fifth point is the installment credits. It is like paying small amount of money for a certain period of time continuously in a cycle. Like on monthly basis you pay EMI. The sixth one is loan from the unorganized sector. Like when if a person is really rich and I want to take some loan and I take some loan, then it is known as money lender, that I have taken some loan. And the friends and family you can see on the screen. Seventh point is ICD. It is known as intercorporate deposits. It is of 3 types. The first one is known as call deposits. Like if I call today, then you have to deposit the money by tomorrow. Just take example, if I am a person and I want to take a loan and the other person has said yes, okay. Then when, at what time you will return, I myself will call you, and tomorrow same time you have to deposit this much percentage. Like if I have given you this much amount, so that time I will call you and ask you for this much of deposit. So that is called deposit. The second one is the 3 months deposit. This is the another one, second type of ICD. In this, the time duration is 3 months and the percentage is 12%. The third one is 6 months deposit. In this, 15% is the amount. Let us now understand further. There are different types of securities which we give for some financial purposes. Sometimes there are different types of values, the properties, like there are movable goods, there are shares, there are different types of documents. When we take loan and we have to return back that same amount of loan to save our property for which we have taken our loan against the property. So the first one is movable goods, the second one is shares. For any business, when there are different partners are sharing one business, then you need to return your part of share to your business partner at the given time period. The third type of security is like bill, you have the proof, it is just like receipt. It is just like when you have returned the money, you have returned your bill. Now you can see on the screen different types of securities. The first one is fixed deposit receipts. So this is the kind of FDs, fixed deposits, when you keep some amount as a security for yourself, and sometime later when you need to take some loan, and when you give that FD as loan against that amount, and if you are not able to pay that amount on time, then that FD is broken. It means it is gone. Second type of security is life insurance policy. And the third type of security is your jewelries and precious metals, which you give to someone not for sale, but to take some amount of loan. When you return that amount of loan, and then you take back your jewelry. Let's now understand the small businesses. According to MSMED Act in the year 2006, every manufacturing enterprise, if it is micro, then the investment limit can be up to rupees 25 lakhs. The second one is for a small enterprise. If we set up any small manufacturing enterprise, the limit for investment is from rupees 25 lakhs till rupees 2 crore. The third one is a medium manufacturing enterprise. For this, the investment limit starts with rupees 5 crore and moves till rupees 10 crore. The second one is service enterprise. Just like the previous one, that was about small business, this one is little different. Service enterprise is different. In this, there are different features which I would be explaining. The first one is micro service enterprise. In this, the investment limit is up to rupees 10 lakh. The second service enterprise is a small service enterprise, and the investment limit in this is from rupees 10 lakhs to rupees 2 crore. The third service enterprise is the medium enterprise. In this, the investment amount is rupees 2 crore to rupees 5 crore. Let us now understand different roles of small businesses in India. There are different types of employments you have seen, so to provide employment to the people, and also making different varieties of products is also one of the important role. And also there are some regions are more developed, so to make a balance in the development of different regions. So this is also one of the important role of small businesses in India, to make a balance in the regional development. The fourth important role is for the opportunity, to provide opportunity for entrepreneurship. The fifth important point is the low cost of production. The sixth important role is to capture new business opportunities. The seventh point is customized production of different items. If the company is really big, then it is difficult to make such changes. But if the company is it's a small business, then such production can be customized. Now let's understand methods of raising long-term finance. The first one is issue of shares. In this, equity shares comes. Now let's understand different merits and benefits of equity shares. First point, shareholder is owner. Second point says that the risk is really high. So high risk, high return. Third point says that value rises with increase in profits. Fourth point explains that in the stock market it is easily sold. The fifth point explains that the liability is limited. Like previous slide we had discussed, that was from shareholders' view. Now this is from the management's overview. In this, no charge on fixed assets and only repay of the closing of businesses. And the third point says that there is no dividend. It is not must. It is not necessary. And the fourth point is the confidence is really high. What are the limitations? You can see on the screen. The first one is the dividend is not certain. It is not fixed. The second point says that there is high speculation. So there is so much going on simultaneously. So this is one limitation. Third point is there is high risk of loss. Now the limitations we can view from the management's point of view. The first one is there are many formalities. Every time you need to provide some proof or documents. The second limitation is it can cause conflicts among the team members or the group. Let's now understand the preference shares. This is important. There are different types of preference shares. Let us now understand. The first one is convertible and non-convertible preference share. The second one is cumulative and non-cumulative preference share. The third type is participating and non-participating preference share. The fourth one is redeemable and irredeemable preference share. Now, this is the second type, which you can see on the screen, issue of debentures. Now, there are different benefits, merits of debentures. The first one is that they are secured loans. The second is the return is assured. The third is whenever you take some loan, then there is good earning assures and high return to equity. This is like no right to vote in a company. Below that you can see on the screen is interest paid is charged to company and helps save tax. Now, there are some limitations of debentures. We will be discussing them. The first one is that interest payment is fixed. The second is you cannot borrow without proof. Without any fixed asset, you cannot borrow. The third point says that the borrowing capacity reduces. It is a limitation of debenture. Trading on equity. It means, let me explain you. The first one is high debt is equal to higher equity in return. The second point explains that when we raise funds with higher debts component, then we get higher returns on those equity shares. The third point explains that the return on investment is greater than the interest payment. Let's now understand different types of debentures. The first one is security. The second one is tenure. The third one is convertibility. The fourth one is registration. Let's now understand the loan taken from specialized financial institutions. Let's now understand the loan. The first one is medium, and the second is long term finance. For both the types, this loan is used. For a very short time, it is not used. Let's now see the examples. IFCI, SFC, and SIDS. All these are these examples. The third one is the maximum time period for this loan is 25 years. Before 25 years, you need to return back your loan. And also the low interest rate. And taking large amount of loan is also possible. The fourth point is borrowing from commercial banks. Let's now understand different merits. Earlier we had discussed about the borrowing. The first important advantage or merit is flexibility. The second is secrecy. The third is lower time and cost. The fourth is that there is no interference from the outer party. The fifth is that the repayment is easy. And below that, you can see the point, that is low interest for the villages. Now let's understand the limitations. The first one is guarantee on assets required. The second is that there is no certainty on continuity of short-term loan. The third point is different formalities make it a time-consuming and inconvenient. The fifth point is about the public deposits. Let's now understand the different merits. The first one is it is simple and easy. The second merit is that no charges on assets. The third is it is economical. And the fourth advantage is it is flexible. There are some limitations also. The first one is that it is not sure, it is uncertain. The second is that people may have doubt, so insecurity. And the third one is limits on amounts. Sixth point is about the retention of profit. Let's now understand the merits. The first one is cheap capital resource. The second is financial stability. And the third is benefits to shareholders. Now let's understand the limitations. First one is really high profit is needed. Second limitation is that dissatisfied shareholders. And the third limitation is funds are mismanaged. The seventh point explains the lease financing. When we need some resources, some amount of loan, so there are some documents, procedure which are required. Eighth point is foreign investment. So, foreign direct investment. Ninth point explains about the global depository receipt. I hope you all understood this well. You can check your knowledge by finding answers of questions from this lesson.